Did you know that a single $2,025 investment with an average annual return of 7% could balloon to over $8,000 in 30 years? That's right, just a modest sum today can grow exponentially over time, thanks to the magic of compound interest. That's the power of compound interest, folks. It's the principle where the interest you earn also earns interest, creating a snowball effect that accelerates your wealth accumulation. It's like magic, but instead of pulling a rabbit out of a hat, you're pulling wealth out of thin air. Imagine watching your money grow while you sleep, work, or even while you're on vacation. This simple example underscores the incredible potential of investing even with a modest starting amount. You don't need to be a millionaire to start, you just need to start. In 2025, the year of opportunity, taking that first step towards financial freedom is within your reach. Setting clear financial goals and making a plan can set you on the path to success. Now I know what you're thinking. Jim, 7% return? Is that even possible in this crazy market? It's a valid question, especially with the market's ups and downs. Listen, I'm not promising you the moon and the stars. No investment is without risk, and it's important to be realistic about your expectations. Investing always comes with risks, and past performance is never a guarantee of future results. However, history has shown that with careful planning and a diversified portfolio, you can mitigate some of those risks. But with smart choices and a little bit of patience, achieving consistent long-term growth is absolutely achievable. It's about making informed decisions and staying the course even when the market gets rocky. This isn't about getting rich quick, folks. It's about steady, sustainable growth that builds over time. It's about building a solid foundation for your financial future, brick by brick. Each investment you make is like adding another brick to your financial fortress. It's about taking control of your money and making it work for you, instead of the other way around. By actively managing your investments, you can ensure your money is always working towards your goals. And let me tell you, there's no better feeling than financial security. Knowing that you have a safety net allows you to enjoy life more fully. It's the freedom to pursue your passions, take care of your loved ones, and sleep soundly at night knowing you're financially secure. So start planting those seeds today and watch your financial garden flourish. Financial freedom means different things to different people. For some, it's retiring early and traveling the world. For others, it's being debt-free and having the peace of mind that comes with it. In 2025, with the ever-evolving economic landscape, financial freedom might mean having the flexibility to adapt to new opportunities and challenges. It could mean having the resources to pursue remote work or start your own business. Whatever your definition, the key is to identify your financial goals and create a roadmap to achieve them. This is where smart investing comes in. It's not just about throwing your money at the latest hot stock or following the herd. It's about understanding your risk tolerance, diversifying your portfolio, and making informed decisions based on your individual circumstances. Remember, investing is a marathon, not a sprint. There will be ups and downs along the way, but by staying the course and remaining disciplined, you can weather the storms and come out ahead in the long run. The year 2025 presents a unique opportunity to reassess your financial goals and leverage the power of smart investing to achieve them. One of the biggest roadblocks to investing is lack of knowledge. Many people feel overwhelmed by the sheer volume of information and the complexity of financial markets. Let's face it, the world of finance can seem intimidating, with its jargon and complex instruments. Terms like derivatives, mutual funds, and asset allocation can make anyone's head spin. But here's the thing. You don't need to be a Wall Street whiz to be a successful investor. You just need to start with the basics and build your knowledge over time. There are countless resources available, from books and articles to online courses and financial advisors, that can help you demystify investing and empower you to make informed decisions. Many of these resources are designed for beginners and can provide a solid foundation. Another common hurdle is fear of risk. The idea of losing money can be paralyzing, especially if you're new to investing. It's natural to be hesitant about putting your hard-earned money on the line, especially in volatile market conditions. However, understanding the nature of risk can help mitigate these fears. But remember, risk and reward go hand in hand. Higher potential returns often come with higher risks, and vice versa. The key is to find the right balance for your individual risk tolerance. This means understanding your financial goals, time horizon, and comfort level with market fluctuations. If you're risk-averse, you might opt for more conservative investments like bonds or index funds. These options tend to be more stable and provide steady returns over time. If you're comfortable with higher risk, you might consider growth stocks or even alternative investments like cryptocurrency. These can offer higher returns but come with greater volatility. Market volatility is a fact of life for investors. It's important to remember that fluctuations are normal and part of the investment journey. Prices go up, prices go down. This cyclical nature of the market can be unsettling, but it's essential to stay the course. It's easy to get caught up in the emotional roller coaster of the market, but it's crucial to stay focused on your long-term goals and avoid making impulsive decisions based on short-term fluctuations. Emotional investing can lead to poor decisions and missed opportunities. Remember, time is your greatest ally in investing. The longer you stay invested, the more time your money has to grow and compound. By staying invested for the long haul and riding out the inevitable market dips, you give your investments the opportunity to grow and compound over time. Patience and persistence are key to building wealth through investing. Section 4. Exploring your investment avenues: stocks, ETFs, real estate, and cryptocurrency. Now let's talk about some of the different investment options available to you. Each of these options has unique characteristics and can play a different role in your overall investment strategy. Owning a stock means owning a piece of a company. When you buy shares, you become a partial owner of that business, which can entitle you to a portion of its profits through dividends. Stocks can offer significant growth potential, but they also come with higher risk, as their value can fluctuate significantly in the short term. This volatility can be influenced by various factors, including market conditions, company performance, and economic indicators. ETFs, or exchange-traded funds, are like baskets of stocks that track a particular index, sector, or theme. They are traded on stock exchanges, similar to individual stocks, and can be bought and sold throughout the trading day. They offer instant diversification and are generally less volatile than individual stocks. This makes them an attractive option for investors looking to spread their risk across multiple assets. Investing in real estate can provide steady cash flow through rental income and potential appreciation in property value. Real estate investments can also offer tax benefits and act as a hedge against inflation. However, it requires significant capital outlay and can be illiquid. This means it might take time to sell a property and convert it into cash, which can be a drawback for some investors. Cryptocurrencies like Bitcoin and Ethereum have gained immense popularity in recent years. These digital assets operate on decentralized networks using blockchain technology, which offers transparency and security. While they offer the potential for high returns, they are also highly volatile and speculative. The value of cryptocurrencies can swing dramatically in a short period, influenced by market sentiment, regulatory news, and technological advancements. Each investment option has its own set of pros and cons, and understanding these can help you make informed decisions. The right choice for you will depend on your individual financial goals, risk tolerance, and investment timeline. It's crucial to align your investments with your long-term objectives and financial situation. It's important to do your research, understand the risks involved, and stay informed about market trends and economic conditions. Consider seeking advice from a qualified financial advisor before making any investment decisions. They can provide personalized guidance based on your unique financial situation and help you navigate the complexities of the investment landscape. Section 5. The power of compound growth. Time is your greatest ally. Remember that surprising statistic we started with? The one about $2,025 growing to over $8,000 in 30 years? That's the magic of compound growth at work. It's like a snowball effect, where your earnings generate more earnings, and those earnings generate even more earnings, and so on. The earlier you start investing, the more time your money has to compound and grow exponentially. Let's say you invest $2,025 every year for the next 30 years. With an average annual return of 7%, your investment would grow to over $180,000. That's the power of consistency and letting your money work for you over the long term. Even small, regular investments can add up to a significant nest egg over time. Time is your greatest ally in investing. Don't underestimate the power of starting early, even with a modest amount. The sooner you plant that seed of financial growth, the more time it has to blossom into a fruitful financial future. Section 6. Navigating the investment landscape, making informed choices. The world of investing can seem like a jungle with countless options and potential pitfalls. But remember, you don't have to be a financial expert to make smart investment decisions. The key is to educate yourself, understand your risk tolerance, and seek guidance from trusted sources when needed. Diversification is crucial. Don't put all your eggs in one basket. Instead, spread your investments across different asset classes, sectors, and geographies to mitigate risk and maximize your potential for returns. Remember, a well-diversified portfolio is like a well-balanced meal. It provides all the essential nutrients for long-term financial health. Stay informed about market trends and economic developments, but don't let short-term fluctuations sway your long-term strategy. Remember, investing is a marathon, not a sprint. Stay focused on your goals, be patient, and let the power of compound growth work its magic. Section 7. Join the conversation. Share your investment journey. Investing is a personal journey, and what works for one person may not work for another. Sharing your experiences, insights, and strategies can be incredibly valuable for others who are navigating the world of investing. What are your investment goals? What strategies have you found successful? What challenges have you faced, and how have you overcome them? Share your thoughts in the comments below, and let's learn from each other. And don't forget to check out my next video where I'll be diving deeper into the importance of diversification and how to build a resilient investment portfolio that can weather any market storm. See you there.